What point are we at in the gold cycle? Joining me today is Ken Hoffman of McKinsey. Ken, welcome back to the show.
Thanks for having me.
Nice to see you here in Colorado Springs at the Denver Gold Forum.
It's great being here.
So let's talk gold. I know you have a big paper coming out.
We do. I think you're looking at two different things. I think you have to look at where gold equities are in the cycle and where gold is in the cycle. And I think they're in quite different places.
Absolutely.
For the gold equities, I think what we're seeing in the marketplace is obviously deals. This is what everybody's talking about at the conference. But it's pretty a natural progression. The industry's really going through a point where you've seen a huge decrease in reserves. A lot of the companies need to make changes in order to sort of reinvigorate themselves. And look at the deals, they're pretty interesting. They're all stock, no debt being added. So they're really being done at a point in the cycle which makes them bigger, make them give the ability to look for better assets. And what I want to see is, are they going to use big data to actually explore? Because I was looking at some facts, and back in 1980, only about 15% of new reserves came from the juniors, the explorers. Today, it's almost 75%. And what you've seen is those big companies who used to really go out there and explore and had an advantage in the marketplace have sort of given that up to sort of buy the small guys. Will big data sort of change that? And actually saw Goldcorp was talking about just that, where they're using Watson computers to sort of look at stuff and try to find new deposits. That's going to be really interesting to look at.
So you think the mining industry is going to be embracing more innovation, more technology, kind of how oil did?
Yeah, I think a few years ago, everything was big data. Yeah. It was like in every presentation, but they had no clue how to use it.
Right. So it was just buzzwords.
Exactly.
Right.
It was like the .com in the late 90s. Right. It was a great word, but nobody knew how to use it. And then in the 2000s, they learned how to use it, and it became really powerful. I think the mining industry is at that point where you're going to see a lot of power come through with the data.
And speaking about mergers and acquisitions, as you alluded to, we saw a huge announcement yesterday, Barrick Randgold, two majors coming together. We hadn't seen this in years. Were you surprised, and what could this mean for the industry?
Well, I think if you look at the industry and the way it's sort of the production's been heading down, it sort of made sense. You would start to see some of these big guys start to dance and say, hey, how can we sort of realign our assets and go at things a little bit differently? So I don't think it's a big surprise from that standpoint. And could it happen in other companies? Yeah, I think everyone's sort of saying, well, wait a minute, do we need to rethink our strategy here? And they're looking at gold prices down to 1,200 or so, and they're like, is this the time to really shake things up? And I think it's very possible that will happen. I've been thinking there would be this a few years ago, to tell you the truth. It's finally, you're starting to see it happen right now. And the deals, like I said, are being done for stock, not for debt. So right. The companies can't get themselves in too much trouble. So
as an investor, would you be more weighted on the gold stocks right now or physical gold?
Well, look, part of the reason investors got pretty upset with the gold companies is the underperformance of the gold equities versus gold. And if the companies can find a way to reinvigorate themselves to say, we actually add value in the ground, that you're getting sort of a long-term call on gold prices because of our exploration abilities, then I think you'll start to see the differential between gold and the stocks really start to shrink.
Are they doing that? Are they doing a good job at that?
To date, no. I think you can look at the numbers and you look at the GDXJ or the GDX versus the price of gold over the last 6-7 years, it has not been a pretty picture. And I think, again, that's why you need a shakeup in the industry. That's what makes the industry want to change. It's not working, guys. Let's do something different. Now, look, this could be the perfect time to do a deal because I just was reading, and I like to read these things, the Congressional Budget Office of the U.S. put out a 25-year projection of our deficit. It's like this. It goes off into, that's great for gold. When the U.S. is just going to print money endlessly and have deficits endlessly, gold price really likes that because the currency versus the dollar on a long-term basis, if those numbers hold true, you're in a good part of the cycle for gold.
Ken Hoffman, thank you so much for your thoughts today.
Thanks for having me.
And thank you for watching. We'll have much more for you from the Denver Gold Forum.